The price of silver is extremely low at this very moment, close to or even below production costs. This means that now it is cheaper for investors to buy than it is for mining companies to extract it from the ground. Take note, as this is a rare anomaly which usually does not last long. In this video, I'll explain why I think silver has more potential than gold, why the risks are low, and additionally, I'll explain the whole silver market dynamics in a simple manner. As always said with educational purposes only and should not be considered to be financial advice. Let's start with the fact that silver is quite corrosive. This is both a plus and a minus. If we buy physical silver, over time the oxygen in the air makes our coins and bars to have a yellowish coloring. This happens when the silver starts to corrode. This is a bad thing from a sense that if we do not protect our silver well and avoid this corrosion over time, we may lose our investment, as no one would want to buy up our bars and coins. Just so you know, there are special liquids with which you can clean up these yellowish stains. The good thing is that over time this makes silver's supply less and less. For example, during the early and middle ages, when ships were transporting gold and silver, a lot of them sank into the oceans due to war conflicts or accidents. The gold is still to this day somewhere at the bottom of the seas and oceans. Water does not corrode it, and even after 1000 years, if we find gold in the water, it would be fine. It could be melted down and reused. With silver, this is not the case. All of the lost silver in the oceans is lost forever. The same can be said for buried coins and bars. So from this perspective, silver has some deflationary characteristics. If you buy physical silver, make sure to use gloves and try not to touch it with bare hands, as our hands are moist and we can fasten the corrosion. Another very positive aspect of silver is that it has the second largest number of use cases out of all commodities. Oil is number 1 and silver is number 2. And as silver is its own chemical element, Ag, it cannot be replaced with anything else. Without silver, all other electronics would stop functioning, a lot of medical equipment would stop functioning, and a lot of problems would arise. Not to mention the ESG agenda of the West. If they really have the ambitions to make the world work with only electrical energy, silver and alongside it copper are the two most important commodities. But both of them are insanely scarce when it comes to so much needed supply. There is just no new supply coming to the market, yet the demand would skyrocket. You can imagine what would happen to the price if demand goes 10 to 20x and supply goes up by 3 to 4x over the next 1 to 2 decades. On the next pie chart, we see all main current silver use cases and what their share is to the total yearly supply. The information is coming from the Silver Institute, which is the main provider of data about the market. The biggest slice goes to the silver's industrial applications, and as we said, they're massive. All kinds of electronics, electric cars, medical equipment and others alike are included here. Then in second place is the jewelry industry with an 18% share. Silver is the most sun-reflecting metal, and this makes it one of the most pristine metals in the industry. But due to the fact that silver corrodes easily and it is a bit soft, almost all silver jewelry has a mix with some nickel in it, which fixes these problems. But the new problem that arises is that about 20% of the world's population can have an allergic reaction due to the nickel in the jewelry. This makes the demand for silver jewelry a bit dampened down. But here it is interesting to note that recently the watch brand Tudor made a new kind of silver mix, which instead of nickel uses aluminum, and this fixes the problem with the allergic reactions. The watch is called the Tudor Black Bay 58 925. Of course, Tudor is not going to change the whole jewelry industry all at once, But this is an interesting change, and the future silver demand from the jewelry industry could go higher if this 20% of the population which is allergic to nickel starts buying the new silver mix. The third largest share of the demand goes to the net investment sector with a 15% share. It includes physical bars and coins. A 9% share goes to the production of more numismatic coins and silver medals. The photography industry uses a lot of silver as well, and it has a 6% share, and 4% goes to both the silver sector and for de-hedging. De-hedging is the process in which silver producers stop selling future production, and this is called de-hedging. With the current price being around $18 to $19 per ounce, less and less future supply is being sold onto the market due to the fact that these producers do not make any money at the current prices. On the next chart, we can see the past and future expected supply and demand for the market. Let me make a recap. The most important factor is the market balance. If the supply is less than the demand, this makes the price move higher over the midterm. The last 2 years, in 2021 and 2022, we can see the demand is starting to outstrip the supply. The most important rule in Economics 101 is the supply and demand rule. If we have more demand than supply, prices move higher. More supply than demand, and prices go lower. It is quite a basic rule. Now it is time to analyze whether silver is over or undervalued. And for this we must evaluate the so-called gold to silver ratio. As silver does not produce cash flows like a business or a real estate property, the best way to analyze such assets is to do a historical comparative analysis to see the current levels in relation to history. Now we are near historic silver undervaluation in relation to gold. The average level is 56 and now we're at 95. This means that over the gold and silver history during the last 100 years, on average, we could have bought 1 gold ounce for 56 silver ounces. Now we need 95. This means it is much better to buy silver. Also, according to data from research done by David Morgan, for each 1% increase in inflation over the midterm, gold moves higher with about 6.3%, while silver, on the other hand, moves by 17.4% for each 1% increase in inflation. Over the last 1.5 years, the inflation rate has increased about 6 to 7%. This means that over the next couple of years, it is quite possible that silver makes a quick double in price, and this would not be anything unbelievable when compared to previous periods in time. Also, as a side note, the correlation between gold and silver is about 80%, which means that when gold goes higher, silver follows it. It is just more volatile and the profits can be much bigger. Do not forget to watch our previous videos on these topics if you want to know more about the precious metals and commodities sectors. Subscribe to our channel and hit the bell icon so that you won't miss out any future value content. Goodbye for now, and I'll see you in the next video.